Hello everybody and welcome to the latest Service Department News webinar sponsored by IMS. Today we're going to be talking about the corporate housing market, how it's recovered and what are the prospects. My name's George Sell, I'm Editor-in-Chief at International Hospitality Media. We are an online publisher of B2B news sites for the hospitality industry and a producer of conferences and award schemes. Today's webinar is going to last an hour. We're going to have around a 45-minute discussion with our excellent panel, and then we're going to have around 10 to 15 minutes of Q&A at the end. We'd like to make it as interactive as possible, so if you do have any questions for the panelists, please do submit them using the Q&A or the chat feature. A recording of the session will be sent via email to everybody who's registered in the next couple of days. Now, as I mentioned, this webinar series is sponsored by IMS, and we are just going to watch a short video to find out some more about them. So thank you to IMS. You can see their contact details in the chat. So if you'd like to know more, then please do get in touch. Now, as I mentioned, we've got a fantastic panel today, and I'm going to ask them all to introduce themselves in turn. You can also see their LinkedIn contact details in the chat. Claire, let's kick off with you. Let's go from the top first. So Claire, welcome to you.
Thanks so much. Hi, everyone. Thanks for joining. So Claire Barrie, Vice President of Sales for Synergy Global Housing. I've been with Synergy now for a year, well, 18 months now, and responsible for the Asia Pacific region and EMEA, but also we'll touch today on the US as well, very versed in the US as well. So thanks for joining.
Thanks, Claire. And Marianne, welcome to you.
Thanks, George. I'm Passi. I'm the CEO of the Corporate Housing Providers Association, or CHPA, and we're a trade association for corporate housing providers, service department providers, agents, and associate partners, that everyone supporting the industries. Thanks for having me.
Thanks, Marianne. Vivi, over to you.
Thank you, George. Hi, everyone. My name is Vivi Himmel. I'm the CEO and co-founder of AltoVita. AltoVita is an enterprise software. We consolidate what we understand is a very fragmented distribution market around the world, and we specialize in diversified asset classes from apart hotels, co-living, service apartments, as well as professionalized unique homes. Thank you for having me.
Thanks, Vivi. And Gavan, welcome to you.
Thank you, and good morning and good afternoon, everyone. I'm the CEO and founder of Nomad Temporary Housing. We're a global temporary apartment company based in California with offices in Shanghai, Hong Kong, London, and Phoenix, Arizona, as well as the home office in San Diego.
Thanks, Gavan. And I should mention that Gavan and Marianne are both at the Worldwide ERC conference in Chicago today. So thanks to you guys for taking time out of your schedules to join us. We appreciate it. And last but not least, Michael, welcome to you.
Thank you, George. Thank you for the invite. Michael Berendsen, co-owner and director of Corporate Housing Factory and Service Apartments.nl, and that's mostly based in the Netherlands right now. And being in the industry for more than 21 years, I know pretty much everybody there as well. And we do service apartments all across the Netherlands, and more to come.
Thanks, Michael. Now, I'd like to kick off by asking you all to quickly cover off what you think are the main short and long-term effects of the pandemic on corporate housing as you see it from your perspective. So, Michael, let's stay with you, and if you could go first, please.
Well, I think the pandemic really showed maybe also a split in between the apart hotel corporate housing, and I would say the residential part, which we predominantly do. I think the change is that the larger apartments are in those situations more interesting for people to stay in while they are stuck. And maybe also that there would be a shift towards more residential in the future, as we believe that might be the case.
Mm-hmm. And Gavan, from a US perspective, what have you been seeing?
Well, the United States sector is primarily based with master leased apartments by serviced apartment operators versus in Europe and Asia where they're more building based. So the good news for the industry in the United States and Canada was because of the flexible leases, over time, within 6 months, the industry was able to reduce the stock of apartments by approximately 30% as demand fell. So that's the good news. You know, the alignment happened, and then so people, you know, gave back their apartments. The bad news is, for some operators, the fall with COVID happened more quickly than others. Temporary apartment operators that started to go after the leisure market in the United States were impacted worse than people who were focusing solely on corporate rentals. People who focused on short-term stays, of course, their occupancies declined much faster than people who had, you know, average 90-day stays. So all of that happened, of course, in the North America market. And so there's been this shift where the inventory is down and now demand, of course, is picking back up. And so we'll see how fast operators respond with bringing back inventory. And as everyone knows, some operators were not able to pay the rents. Other operators went out of business. Some of the new operators like Stay Alfred and Lyric, you know, went out and leased many thousands of apartments only to default on those leases. So in the United States, one of our recovery points has to be our reputation, because some people soiled the reputation of the industry.
Yeah, thanks, Kevin. And Marianne, does that tally with your experience, you know, from your membership?
Yes, members are telling us, Gavan touched on the inventory issue, and it was a great point, Gavan, that members were able to scale back on inventory a year ago or a year and a half ago. But now, as demand is picking back up, they are having some challenges with inventory. So they're getting creative. So some are using some single family homes, or they're just figuring out how they can best support clients and guests that need to both work from home, learn from home, shelter in place, multiple people working in the same apartment. And so they're seeing, I think Michael stressed the need for bigger apartments. I'm even hearing some of our members, if families need to stay together, but they don't have one large apartment, there might be two apartments close by across the hall from each other, whatever, to be able to accommodate the way people need to live today. But inventory remains a challenge, especially in North America. That's consistent.
Thank you. And Claire, Synergy's obviously got a global presence. What do you think have been the main short-term effects on the markets that you operate in?
Well, I completely agree with what's been mentioned so far. We've seen exactly the same. I mean, but what I will say is, as we look at the globe versus just sort of certain continents, it's very, very different in each and every area and every market. We've spoken a lot about the US, and I completely concur. You know, we saw the same thing. And to Gavin's point around reputation, I think as we look ahead, that's going to play a very, very important role as to how people and how companies actually performed and conducted their business during the pandemic as to how we move forward. What I would say, the great thing about what's happened in this kind of great pause is it's given companies the opportunity to look inward and look at perhaps some of the practices and some of the things that they were looking to perhaps create and innovate as they just didn't have the time to actually do that. And so that's been the real positive. I mean, the temporary housing industry has changed massively and radically, I think, over the last 2 years. And I think if we hadn't had that great pause to be able to take the time to look at things differently, perhaps we wouldn't have jumped so far ahead as we currently see ourselves today. I mean, the impacts of the pandemic has now seen this massive spike in the US, which probably hasn't sustained for as long a period as maybe we might have imagined. I mean, it was absolutely when air first opened up domestically within the US. I mean, the supply and demand was just very, very challenging. Of course, when we look at Asia, though, that's much slower, right? And I think Asia is going to become probably last to the party, I would say. And as we look at Europe, it's very much based around the return to office and vaccination programs, et cetera, as to how the market is going to change. But what I will say is that the reputation of our industry today is stronger than I think it's ever been. It's getting so much visibility. And I think we have the pandemic to actually thank for that. But for too long, we were sort of seen as, you know, kind of alternative accommodation. Whereas today, we're seeing it as very much mainstream and very much the accommodation of choice. And we also note that as we look and we come out of this, one of the key challenges for the hospitality industry in its entirety, particularly hotels, is the challenge specifically here, where we've also gone through Brexit, et cetera, the shortage of staff and the impact that that's having on guest experience within that hospitality sector. And for us, that plays beautifully into our hands, so to speak, as to the services and the creativity that we can offer within this industry.
Thanks, Claire. Let's touch a bit deeper on these regional differences in where we're at in the recovery. Claire, do you want to take the Asia Pacific piece and just give us a snapshot of where we are there?
Yeah, sure. So with Asia Pacific, it's a challenge. I'd say of all the markets, it's been the most challenging. It's opening up, it's closing again. You know, they're very, very sensitive to the new cases, etc., and what's happening there. We've also got new restrictions as far as guests in-house, and not all of the properties can be accepted to take guests, foreign guests, etc. So we have a challenge there for the international market in APAC. And I'd say that's going to be slower to rebound and last to join the party. We know that Singapore's opening now, and that's obviously a key market for all of us, Singapore, Hong Kong, and the likes. And so the quicker we see that coming back, the better. China's still very insular, still very much keeping themselves to themselves. So each market, again, probably more in APAC than in any other market. Each country is different, and each country has its different rules. But yes, we are all keen to see that market open up again. But I think perhaps definitely for 2021, it's certainly too little too late.
Thanks, Claire. Vivi, would you like to give us a snapshot of the European market and how you see that recovering?
Sorry,
yes, of course.
Oh, sorry.
Come to you in a minute, Michael, but
I didn't hear, and everybody stay quiet. So
let's hear from Vivi first, and I'll come to you, Michael.
Yeah, in Europe, or EMEA rather, so covering both also the Middle East and Africa, we're also seeing a lot of movement back again, but there's a lot of last-minute initiations or bookings because of the immigration processes, also flight cancellation, COVID test statuses that we discussed earlier, which contributed to a lot of the bookings being finalized with very short notice. And the same with what Gavan mentioned earlier, inventory problems. So because of this, there has been some difficulties in securing availabilities in the last few months or so, when a lot of demand have picked up. But I suppose that there is also a silver lining in all of this. During the pandemic, we saw that a lot of software that streamline guest experience and operations have been extremely key. So not only to address health and safety and security, which have heightened in terms of standards, but also labor shortages. And we see a lot of innovations, which include smart lock, automated guest screening, smart thermostat, noise monitoring, housekeeping and maintenance, which allows the hospitality sector, which operate with suboptimal labor, to really work efficiently and empowering their staff to deliver higher value work, and using this technology to compensate for any manual processes.
Thanks, Vivi. And Michael, you mentioned before we started the call that your occupancy levels in the Netherlands are pretty much back to where they were pre-pandemic.
Yeah, and basically also what we see is that the average length of stay is getting longer and longer, and it has to also do with the current situation in Holland in this case, that the normal market, the housing market, there's such a shortage on supply that the people who arrive, they need to stay longer and longer until they find a house to let or to buy even. We see a lot of expats of companies just reaching out to buy because, well, the mortgages are cheap, so to say, and they got some backlash from the company. And so we see the average length of stay increasing. I do see a problem for the future, the near future, on supply as well. A lot of construction has stopped during the whole pandemic. So we're back like 2 years on some projects, new developments we were aiming for. And we see that is becoming a problem. So basically what everybody says, we see it more in newly builds before they deliver to the market and the global housing market on its own.
Thanks, Michael. And Marianne, in the Americas, what are your membership saying to you about where they are in the recovery? How are things going over there?
They're saying, and there's been a lot of discussion on that this week as well, but they're recuperating, they're not recovered. So that's kind of the expression that I've been hearing people say. And they're anticipating transferees, and Gavan, you can probably speak to this more specifically, but they're anticipating international transferees to open up in Q1 of 2020. So we haven't seen that. So they're anticipating pent-up demand to come back, but they're also hesitant. They can't necessarily get the inventory, hesitant to rely on the demand coming. So to take on extra inventory, since that's so costly for companies to take on. So that is consistent with what we're seeing here. And the other part is, Michael was just mentioning that people need to stay somewhere. So as they're waiting for a home to be built or trying to find the home, because our housing market is crazy throughout North America, especially in the US, they are staying longer. People that have sold a home and have not yet found a home are staying in apartments. And so they're needing to extend, and that seems to be really where the problem is coming in, and it's exacerbating the inventory issue here. So people are getting a bit creative with family homes, single family homes, if they can find them as well.
Thanks, Marianne. So let's talk a bit more about customer behavior and customer demographics. Gavan, what are you seeing in terms of average length of stay, volume of project work, volume of relocations, and so on?
Well, we're seeing all signs are positive, from where we hit bottom a year ago. Our clients are picking up their pace. We've had several clients do large intern groups this summer. The previous year, of course, was really suspended. But this year, we had hundreds of interns back into the markets from our tech clients. We were excited to see that. On the flip side, there was other tech companies that held off, and so, but that's coming back. We have one client that is a large client of ours that has reported there's 4,500 moves that have been approved. They're in the queue. They're just waiting to go. And the companies have been patient with their employees, but their patience now is running thin. They're starting to demand that, okay, we gave you an extra 6 months to make the move, but now you got to go. And so we're seeing some of that. It's exciting, going off of what Michael and Vivi have said. In Europe is kind of on fire for us right now. We're starting to see a big pickup there. One of the interesting things we're seeing is longer stays in temporary housing as opposed to conventional relocation. So somebody may go for a year now in a temporary apartment as opposed to a permanent move. So companies are getting creative with their teams and with the support for remote work. It's interesting that there's relocation policies being developed around remote work. And so they're acknowledging and recognizing this is going to be a long-term trend in order to keep talent. So for the most part, we're excited. But as Claire said, Asia at this point is still our lowest performing market in the world. Other than we do a lot of quarantine 21-day stays, and then they're moving into temporary apartments. So it's really twice the work for us because we're really doing 2 stays for every rental. And so there's a lot more coordination effort, especially because the dates are constantly changing.
Thanks, Gavan. Claire, does what Gavan said reflect your experience in terms of length of stay and this kind of pent-up volume that seems to be just around the corner?
Yeah, I agree that patience is running out. I think it's now time to, companies have been patient, but business has to reemerge, and you know, and we have to move forward, right? We're coming out of it now. We have to reemerge and look ahead, and kind of move on from excuses and humps and bumps in the road, etc., and say, right, you know, we have to live with this. This is the new world. Let's get on with it. So what I would add to what we've said is, because of these discussions that we've mentioned, the ability at the moment to attract and retain talent is huge. And it's on the lips of all corporates today, is the fact that, yes, they want to retain their talent, but equally, you know, how do they attract talent? And therefore, as we look at the guest experience today, it has to be agile, it has to be personalized. So the days of, oh, well, this is our standard operating procedure, and, you know, this is how we work as an organization, that's different today. You know, we have guests that are the old school road warriors who really want as little hand-holding as possible. In fact, they don't want to hear from you. They're not really interested in any of your pre-arrival, this, that, and the next things. They don't care. Just let me get myself in the door and leave me alone. And then you have other guests who very much want that hand-held experience. They're very much high touch. They're very, you know, that way inclined. And so as we look at this talent and this pool of talent that companies have, we as the extended partners to those organizations have to be able to adapt, and we have to be pliable to our services. And I think that now means that today, that guest experience, whilst it's always been critical to success, I think today, as I said, we have to adapt to what's good for one is not necessarily good to another. And we have to be quick to act on that. So that changes as we talk to behavior. I think that's the key behavior change, is because of this purpose and this need to serve. We as an extension of those companies need to adapt and change to be able to serve. And then also, as we look at guest experience, a lot of that comes at a cost. Now is not really the time to be driving costs down when we're looking at really elevating that guest experience. At the end of the day, you know, rentals, leases, service, delivery, you know, of goods has all increased. Prices have all increased. So for us now, if we're looking to balance that guest service and that customer experience and go the extra mile in order for companies to retain this talent and for them to feel special and for them to feel great, you know, this is the company I want to work with. Look how they look after me. It's fantastic. You know, companies are reliant on us to do that, and that comes at a cost. So this constant need to drive rate down and et cetera, we have to educate clients that say, yes, absolutely, you want us to do this? Great, that comes at a price. And we shouldn't always anticipate that we have to include it either. Customers are very open to say, great, you know, what is that going to cost? And so therefore, I think that's the key thing that we need to talk about today as we're looking at changes of behavior in our guests.
Mm-hmm. And as these changes are manifesting themselves, are there any patterns emerging around the types of companies that are being bold or those that are being cautious? Are blue chips, for example, more reticent to send people on relocations than SMEs and tech companies?
Yeah, I think that's a really interesting question. And I'm not normally one to sit on the fence. I normally have an opinion one way or the other, but on this one, I am a little on the fence, because it very much depends, it may depend on sector or vertical of market. But even within those verticals, you have some that are moving and they're bullish and they're out the gate, and then others that are a little bit more conservative. What I will say though is, again, it depends where we are in the globe. I think domestic US is extremely strong, bullish, out the gate quickly, spike, pent-up demand, all of that. When it comes to transatlantic travel, well, that's been closed. So we have yet to see. I mean, that's opening, now. I think it's a little late in the year. We were hoping for a late Q4, kind of an Indian summer maybe, where it's a little delayed, and hope to see, oh, great, well, maybe we'll have the best Q4 we've ever had in history. Because I mean, how many times have we all sat there thinking, what's our strategy for Q4? I mean, it's like that's been going on for years. And I think this year we thought, we might be in for a nice surprise. I do think our Q4 this year is going to be stronger than probably it usually has been. But I also think that companies are saying, you know what, we've waited this long, we'll hold on another month. I think from January 2022, it is going to be crazy. I think it is going to be a very, very exciting time for us, but I think we will be victims of our own success. I think we will have operational challenges. We will continue to have this pricing elasticity for buyers that makes budgeting extremely difficult because of the lack of control on pricing. And so operators will have that, they will be able to have some sort of a say on what that looks like. But I know that we are at the mercy of next year for 2022 of how do we budget, or how do our clients budget for something that we have little control over. That's going to be our challenge.
Thanks, Claire. Gavan, in the States, is it down to the individual leadership of a company about their attitude to sending staff to new places, or is it sector specific?
Well, we found when at the beginning of the pandemic, of course, the brakes were slammed on business travel. And we had every single one of our financial services companies, banking customers, they all put a freeze on all corporate travel. They weren't allowed to walk across the street, never mind get on an airplane. And so that impacted relocation and temporary apartments. And then, then it was across the board, but sector specific, oil and gas has roared back. They're moving people like crazy. Our consumer products customers and our pharma customers, Nomad, we've housed every one of the pharmaceutical companies that did vaccines, and they moved hundreds and hundreds of people. So pharma never stopped. Consumer good packaging companies, Procter & Gamble's, the big companies like that, they never stopped. They produce, they have factories, they had to move people. The biggest loss we saw from region to region, of course, as Claire said, was global travel. The loss of Indian and China inbound people into the United States, due partly to the pandemic and then visa restrictions, really slowed Northern California and the tech industry, specifically Seattle markets. But now what we're seeing is mandates from corporations have really stopped, and now they're traveling and they're moving based on their own internal needs. So the mandate seems to be dropping because people feel safe to travel today, it's safe to move today. And while they've let their employees have flexibility to delay their moves, imperative business moves and transfers are happening. And projects need to get done. And so, we're seeing a thawing out, but in Europe, again, has been a big market. The southern United States more than the northern United States have done oil and gas more than other and consumer products.
Thanks, Kevin. Let's talk a bit about the physical product and how we think that might evolve due to new ways of working. Vivi, I know you've done a bit of research about this. So how do you anticipate the actual physical corporate housing product evolving?
Yeah, so I think that it might make sense to maybe deep dive into what the younger population expects nowadays when it comes to guest experience. Gavan mentioned earlier around policy, relocation policies. We're seeing that a lot of these experimental phase of remote working and hybrid working, so on and so forth, will come to an end at some point, and that more and more solidified models and policies will come into place, and employees will have greater autonomy as well as flexibility in how they work. So when it comes to flexibility, we're seeing the younger companies, so the unicorns, the bigacorns, high growth startups who are scaling up from, let's say, 200 people to thousands of people within the course of a year, for example, have not much policies in place. However, they share a similar value, which is to have employee choice, or we're seeing or hearing words like design by default. So the idea is to give them much more autonomy, much more flexibility, but at the same time operating under the umbrella of compliance. So to answer your questions in terms of the physical property itself, it is still within the same philosophy, giving that freedom and autonomy. And when it comes to guest experience, we're seeing a lot more mobile interaction. So mobile check-in, I mentioned earlier, smart lock interface, and using their Bluetooth to basically open the door, and a lot of these kind of like interactions, community building, all done within a mobile app. And products like co-living is becoming much popular, particularly with companies who have very young population. We spoke to a client earlier this week, and they mentioned their average age of their workers are 24 years old. So there's a huge proportion of Gen Z, definitely millennials, but so we're seeing a lot of these experiential and also mobile driven guest experience will be key going forward.
And if we're talking about workspace specifically, do you think apartment blocks, for example, will need to include some sort of co-working space, as a communal facility, as well as some kind of work area in each individual unit?
Yeah, absolutely. I mean, there's a blurring line between living and working, and there is a convergence in asset classes. It's not news anymore. We've learned that before. I guess the challenge is how to execute it. And I think earlier this year, we spoke about modular technology, for example, how to construct physical assets that will allow you to maximize your yield and be able to convert from a studio, which the demand of the studios has collapsed in the past year, that's no secret. So how can we convert these units into a 2-bedroom, 3-bedroom, 4-bedroom, and be able to convert back to studio as well, seamlessly?
Thanks, Vivi. Michael, are your clients asking you for some kind of workspace in your properties as things have changed?
Yes, during the whole pandemic, for sure. I think we have never so many desks delivered than before. Obviously, people were working from home. Most apartments do already have a proper desk, not a small thingy, but a proper desk. But we delivered sometimes 4 if people are staying in a 200 square meters apartment, because the kids also had to work from home, of course. There were some challenges there for the families, especially. So we delivered a lot of those. But having said also what Gavan said, from the remote working, we think that could be a part of the new working mode, so to say. People don't need to go to work every day, although they're going to be replaced in a temporary accommodation. That could also be an option. So we think we need to keep on delivering those desks to the apartments. What we also do, there's a bit of what Vivi said, is that we are looking for the new locations to have a mixed-use building. Basically, that there is also a facility like a hotel or also an office space like the Regis ones, where you just have a membership or something. So we're looking into buildings which have a mixed use. And in that way, you can basically offer both. They can work from home, but they can also go down in a meeting room or whatever, and don't always have to go to the office in the near future.
Mm-hmm. Thanks, Michael. And Claire, in your experience, are corporates happy for their assignees to balance where they work and to do some of their work from home, even though they've been, maybe sent to a satellite office?
Yeah, I mean, corporates are very measured at the moment, and they realize, again, as we look to the talent, as to what the desires may look like. I mean, it depends on the organization, the business, and the function they perform within that organization, depends on, where they could sit. So, if you're sitting in IB or investment banking, then that's obviously not going to work. But if you're in other roles, then perhaps more susceptible to that. There's definitely more flexibility and more consideration out there. But at the moment, we know that all of this is driven by return to office, and what is that going to look like, and trying to find a balance between what is a business viable option, and also looking at cost. We know that it's not only the suppliers that have felt it over the last couple of years, that it's also these big corporates. And what we're seeing now is, as if we re-emerge, do they really need all of that office space that they once had? Probably not. And therefore, if there's an opportunity to reduce that cost and reduce that office footprint, then they're up for that. Of course they are. And then along with that comes the flexibility of working. And again, when it comes to what we serve and what we deliver, isn't that a fantastic thing for us? It's exactly what we're after. I think as we look at that, for the last couple of years pre-pandemic, things seem to be shrinking. Right, the units seem to be getting smaller and smaller and smaller, and more carved up, with a very much a focus on that co-living space downstairs, or for working, etc. But the units, the sleeping quarters, were getting smaller and smaller. I think that's changing now, right? That needs to reemerge. And I think that as Vivi was saying, ideal if you've got that flexibility, but we have to also be realistic. How many buildings are out there? You can't get that flexibility, right? They are what they are. And so therefore, how can we readapt and make it commercially viable?
Thanks, Claire. Marianne, the role of the corporate housing provider is not just to give somebody a roof over their head. There are the various layers of what you could term softer services. So whether that's a concierge, or arranging childcare, or dog walking, or whatever it is. What is becoming the standard now, and are clients becoming more demanding of those services?
I don't know what necessarily if it's becoming the standard, but I think to Claire's point about the customization, that's becoming very important. I've heard a lot of conversation about that here at ERC this week. So Vivi mentioned the technology streamlining operations and making up for the gap in talent, so to speak. So streamlining some things that people used to do by rote. But there's been some conversation too that the human touch, and Claire mentioned this about the touch points, that's extremely important as well. So instead of 30 emails going back and forth, picking up the phone and having a conversation, while you can streamline moving into an apartment and doing some things via tech or via an app, at times the conversation about the expectation and what really will be a successful, what can the provider do to be successful is important. And there's a conversation, well, who is really the client? Can we get to the actual client, the end user that's going to be in here, and how can we facilitate that? So there's been a lot of dialogue, but I've heard members providing many things, especially during lockdown at the beginning of the pandemic. There was one member that was sharing a story that she delivered grass to someone's balcony because they had a pet and they were in lockdown. They couldn't actually leave. And so they created a yard on their balcony, these types of things, but grocery services, a lot of these ancillary services that people couldn't go and do for themselves, or they're coming across a border and they need to be in a mandatory quarantine for a bit, what they need to be successful. So yes, they're offering a lot of those, from childcare, or at least explaining how they can ease childcare. Looking to see, I'm checking my notes from the conversations we had yesterday, but seeing a lot of things. And some, they talked about the additional costs. members are starting to talk about in terms of resetting expectations, then having these things as add-ons so people can, the guests, the clients can choose what they'd like. So, housekeeping went away last year. Do people want it back? Some do, some don't. So adding all these softer services is almost a cafeteria style menu that people can choose. That helps contain the cost a bit on the provider side, as well as letting everyone customize what their experience will be.
Thank you. And I'm glad you clarified about the grass, because I know in some states that can have several meanings now, delivering that.
Sorry, I should have said, what is it called? Yeah.
Doing it in Amsterdam. We're done doing
it. We're in Amsterdam territory here. Vivi, you've done some research, I think, into what guests want in terms of these softer services. Do you want to share a little bit of that with us?
Yeah, sure. I think I would echo with a lot of what Marianne said earlier. Plus the pet friendly. We're seeing a lot of demand for our little furry friends, definitely over 50%. And then after that, around 500% increase in demand for extra furniture, which is around work desk setup. And then lastly, grocery deliveries, for sure, for those regions which still have quite restrictive quarantine policies.
Thank you. Let's move on to what, aside from the pandemic, is potentially, I think, the biggest external force that's going to change this industry, and that's ESG investing and sustainability. Claire, have you got any thoughts on how the ESG movement is going to affect this industry over the next few years?
Yeah, it's interesting. We were talking about change of behavior earlier and how the industry is going to change. Sustainability is 100% here to stay. And it's just going to get bigger and more important for us as organizations, and equally for our clients in selecting their partners. We know that it's in the heart now of many travel programs, and it's just becoming more and more of a force around sustainability. And it's a key factor when selecting suppliers on what are they doing. I think one of the things we shouldn't be afraid of is we don't have to have it all figured out in our industry. We know we don't have it all baked up, but what's important is, where are we going? So as organizations, what is our pledge? What are we trying to solve for? And then what are our steps to get there? And nothing is too small. And we have to consider this as absolutely part of our strategic plans moving forward. And if we haven't started yet, that's okay. It's never too late. But I cannot emphasize enough the importance of sustainability. And travelers now are becoming more eco-conscious. They are, without being ageist, I think that as we look at the demographic of our travelers today, and as we look at the talent today, again, this is another key factor for them. So it's not just from a corporate perspective and about us doing the right thing, but it's also a matter of choice. Now, I don't think companies are at the point where they're saying you must and you can only choose this. But at this stage, it's definitely a case of, all right, how do our travelers and how do our assignees make a choice if they want to be more sustainable? The other thing that companies are doing at the moment is they're looking at how do they reward travelers for making a sustainable choice. So without necessarily mandating, the M word, but how do they encourage a sustainable choice? And what is it that other businesses are doing out there? So we know that there's many, in fact, there's one at ITM today. There's a sustainability conference, there's sustainability webinars coming out of our ears. We know that it's the buzzword at the moment, but I think it's really important that we don't believe it's a flash in the pan. And I know that it seemed to be a focus probably 5, 6, 7 years ago. It was kind of a bit of a buzzword, and then it sort of petered out. But now we just know it's going to get greater and greater, and selections will be made based on that as being a key criteria. And then also what's important is that it becomes part of the values of the organization. But it's not just a sort of check in the box, oh, this is what we do, and we're going to single-use plastics, and oh, that'll sound good. But it has to actually run within the blood of the company, of the organization. and become the values of that business, so that it's genuine, right? It's authentic, and companies can buy into that as they look to their pledge and how do they actually deliver on their pledge by maybe 2025, 2030, et cetera, et cetera. I saw a thing on LinkedIn today saying that EY is now carbon negative, CO2 negative, which I thought was huge. I mean, who's at that point yet? But very, very impressive. So often though, I think we look at these huge organizations and say, but how do we even implement those types of things? The cost for that is huge. How can we afford that as a business? And it doesn't have to be that, but we do need to become definitely more experts in that field, certainly more researched and knowledgeable in order to, and help each other, sharing best practices, not trying to be kind of insular on it, but what are you doing that we could do? Oh, that's a great idea. Or maybe we could consolidate some of that to make it easier on the purse strings. So yeah, I could go on about sustainability. I'm extremely passionate about it. It's huge for our industry, but I know we're at time, so I'll kind of go.
Thanks. Gavan, just a quick one to you. Are you seeing your corporate clients inquiring about sustainability measures, perhaps of properties that they might be thinking of using, and what are providers doing to become ready for the demands that are definitely around the corner in this respect?
Well, it's a big part of selecting. We're seeing RFPs very focused on it. As Claire said, you're not going to win the business with lip service. It has to be a real program. It has to benefit, the goals of the clients you're trying to attract. One of the things that we started doing, as an aggregator, Nomad has none of its own products, so we benefit from, the product of every one of the panelists, we work with, and we're excited to. So what's interesting is we're starting to inquire more with our suppliers, our certified partners, as to their practices, and between symbolism as far as showing which, are LEEDs buildings or energy efficient buildings, combined with commute practices. One of the things, we can help steer, sustainability and greenhouse gas and carbon emissions, by offering apartments literally closer to the work site. And, you kind of think about it, and we focus on getting them as close as they can to work or where they want to be, as opposed to longer commutes. That probably does more for the world than what you could do inside the apartment. So that's an example of something we're focused on. And the second thing, of course, is what goes in these buildings, how they're managed, how they're built, their energy efficiency. And so, that combined with our own corporate practices, that's how we approach it. And the clients have been very, very receptive. And so, when we point out certain partners that have programs, they're going to win more business than ones that do not.
Mm-hmm. Thanks, Gavan. Just want to stay with you for a moment and talk about potential consolidation in the sector, potential disruptive new entrants. We've seen quite a few significant transactions in the agency space lately. What do you see on the horizon?
Well, it's so I've been in temporary apartments for 41 years, and I've seen a couple of generations of change. In the mid 90s, we saw a couple of temporary apartment operators go public with Marriott Executive Stay and Bridge Street at the time. Then we had a lull, and then we had the growth of the global providers like Bridge Street and Oakwood. And then, we've seen a lot of change in the last 5 years. This is the most exciting time we've ever seen for the furnished apartment industry. You've got operators. There were 4 or 5 venture capital backed operators that have dived into the market since 2015. The big, all on the coattails of Airbnb, because Airbnb has brought a marketing dynamic to, global furnished housing that wasn't available before. So here came Lyric, here came Stay Alfred, here came Sonder, Blue Ground, Zeus is starting to make a play. These companies, raised hundreds and hundreds of millions of dollars, and Sonder is, about to go public at a valuation of $1.7 billion on 5,500 master leased apartments. They don't even own any. And so, how does a company that has lost, $300 million have a valuation of well over $1 billion? Well, welcome to the new world. You don't have to make money to be valued in the billions. But to say it's disrupted the industry, it has. What's interesting is it's disrupted the hotel extended stay business and our part hotel business more so than the corporate apartment business, at least to date. And the reason is because many of these organizations have focused on the short-term leisure stay, again, chasing the Airbnb rental, or they may have some corporate business that ranges from 10 to 40-day stays. So it's fascinating to see the hotelization, if you will, of furnished apartments. But for many operators realize you can never make money at that unless your apartments go to $450 US a day. You cannot sustain a 60% occupancy level because of high turnover, because you're chasing a bunch of weekend stays in Nashville. And so it's a fascinating time to see these companies valued. And of course, Lyric, I think Airbnb threw $200 million at them and they folded. Stay Alfred walked away from hundreds or thousands of apartment rental obligations, and these companies are signing 5, 10, 14-year leases on 60, 70 units at a throw. So, forget the flexibility of flexible master leasing, that they've become inflexible. So it's fascinating to see what's happened with that. Of course, we saw Bridge Street exit. We saw Oakwood exit, going back to the building model. And then apartment services change. Will there be more consolidation? Absolutely. We're seeing some of it in a small scale where temporary apartment operators are consolidating together. I think 3 of them in Houston, Texas, recently joined and formed into one. We'll start to see more of that around North America, I think. But the upside is fabulous, because what's happened is I think Claire mentioned, the visibility of furnished housing has never been higher. And so long-term accommodations like operators like AltoVita and rising stars that are coming along with fabulous product, well-managed business models, they're the ones who are going to win. The ones that are throwing millions and millions of dollars just to go get more inventory and continue to flip them and rent them for less than the cost of their apartments, I'm not sure what they're chasing, because, frankly, we've got to make money in this business to stay in business. At least that's my little opinion after 3 years. Thank
you, Gavan. Before we get on to audience questions, I just wanted to briefly revisit the technology piece. We've spoken about it a bit. Michael, what do you think will be the biggest changes that technology will bring to the sector over the next few years? We've spoken about guest-facing apps, but what else is out there?
Well, I think it fits in a bit also with being sustainable, because I would say we get more devices in the apartments, which are making things more knowledgeable. Like we can see what the usage is of water, we can see what the usage of electricity, and I would say that would be a big one, and that will save costs on us as operators, of course, and then again on the whole market, it would be more attractive. That would be the first thing, and of course also now, as you said, people really want to have those groceries. They want to have more knowledgeable things about what is in their surroundings. Those app things really will fly off. I would say everybody would have a pre-app before they arrive, and they can see what the whole neighborhood is and where they can order this or that and that. Basically, that's something we already strongly believe in for years and already have it established. The easy lock, that's also very, very common already, almost a standard, I would say. So we see that as well. Basically, booking process wise, yeah, it's more becoming company logins and stuff. I believe that will also have a bigger fly. So those things.
Thanks, Michael. Claire, I think you might want to have something to say about the holy grail of real-time booking, given Synergy's recent moves.
Yeah, I think it is the holy grail. You know, the race is on, right? Everybody is after this because it's something that's been lagging in our sector. We are behind from a technology standpoint in our sector when you look at the hospitality world, when you look at accommodation and air. So the race is certainly on when it comes to tech. Yes, we've got some great news. We're doing some great things from a technology standpoint, but I suppose we want to look at what is technology. It's such a broad statement. So we're looking at it, you know, from what Michael was saying, you know, operationally within units. Are we looking at it from a, you know, guest choice, whereby you've got live booking and they can book their own accommodation of choice and look at sustainability. So therefore, you know, you can wrap that into one. Not only are you booking online, but you're booking, you know, not just location or product, but you're also looking at sustainability as per where your interest lies. But then equally, we also look at it as our day-to-day innovation and seamless processes. And what is it that we can auto-populate? And what is it that we can do without human intervention to minimize error and to maximize success and efficiency?
Thanks, Claire. Okay, on to some questions here. First one from Richard Majewski. Hi, Richard. If COVID is a feature of life in the future and respecting the impatience of employers to start relocation, could it be that the talent might prefer to stay at home? Will global mobility fundamentally change? And has this influenced the move of PwC to shed global mobility activity? Who wants to pick that one up? That's a bit of a hot potato, isn't it? Go on then, Vivi, go for it.
I'll go first. Richard, I think that we've talked a lot about sustainability today, but we also should understand the foundation and the fundamental reasons why people move, the migration, the essence of global mobility. It's not just because there is a better resource or better technology or political reasons or economic value, but also climate change. This will be the single greatest challenge of our lifetime. That's why sustainability is such a hot topic. And therefore, we're seeing that the next or the new age of mobility will be driven by people seeking for climate resilient regions to move into. To put that into perspective, you know, Miami may not even exist in, say, 30 years. I was doing some research before the panel today. According to some data on climate control, you know, I can't believe what I'm seeing, but Panama, Bahamas, Bangkok, Shanghai, and even parts of London and New York may not exist by 2050. And so there is always a reason why people are moving and migrating. And it's not just because your employer tells you so. It's more fundamental than that. And we have been moving as in human history for over 100,000 years. It's not going to stop now.
Wow, thanks, Vivi. That is a more profound answer than I was expecting. We've actually come to the end of the hour that's flown past. It's been a great session. Just want to run through a few quick slides before we sign off and say our thank yous. So next week, the Urban Living Festival, the inaugural Urban Living Festival, is taking place at Tobacco Dock in London. We are very excited about this event. We've been trying to put it on for a couple of years and I've had to postpone it several times due to the pandemic. And it incorporates our Service Department Summit and Engage events, which many of you will be familiar with. There's some details in the chat there. We're currently running a 20% discount off tickets, so make sure you take advantage of that. And we've got several sessions pertaining to this industry, which promise to be crackers. There's one here which I'm moderating about service departments and extended stay called the Hospitality Sweet Spot. And as you can see, we've got a good lineup there. There's also the Engage business travel event, and there are several sessions that are very pertinent to today's audience. The impact of the changing workplace on business travel, what really matters in business travel now, fragmentation of business accommodation, the choices, challenges and solutions. And trust me, I'm a travel manager, which sounds like an interesting one. So these are all taking place as part of the Urban Living Festival in London next week. If you'd like to get involved in ULF or any of our other events or webinars, do drop Katie a line. You can see her contact details there, and I think they're also in the chat. Thanks for watching today, everybody. Thanks to IMS for sponsoring. If you're not already doing so, give us a follow on some of the social channels there. We're quite active on those. And I'd just finally like to say thanks very much to Claire, to Vivi, to Michael, to Marianne and to Gavin. Thanks to you all for watching. Enjoy the rest of your day. Thanks very much.
Thanks, everyone.
Thank you.